Hey everybody, Boris, Forex. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar for June 10th to June 14th, 2019. And the story in the COM dollar land as we closed out last week was essentially a big power move by dollar CAD to the downside. Loonie was really the strongest trade of the week, with Aussie and Kiwi taking out or sort of getting held up at the key resistance points, but still trading pretty much on anti-dollar flows into the end of the week. As we enter this week, there is clearly some profit taking in the Antipodeans, with Aussie and Kiwi far weaker than dollar CAD is into the front of the week. Levels pretty much stay as is here at 69 support now to the Aussie, and 70, a level which it touched but got very seriously rejected from just last week. Dollar CAD, on the other hand, really broke that whole 8-week long channel of 34.35. We finally broke it to the downside, and that seems to be a pretty strong signal that there's more downside action to come, although we may see some consolidation. I'll show you that on the charts. And finally, Kiwi also working off the longer term rally to the upside, with 65.50 now as the key support. The data this week, very, very small. There's really only one serious economic report out of the COM dollar land, which is the Australian labor report. Now, it's interesting because I originally actually thought that was going to be weak given all of the negative Australian data we've had in the month of May. But Kathy, looking at the components of all the PMIs, believes it's actually going to be bullish, mildly bullish, Australia. And that could provide a little bit of a boost to the Aussie, because remember, the primary reason why the RBA is not nearly as dovish as everybody wants it to be is that despite all the slowdown in all of the major sectors of the Australian economy, the one offset, housing, mining, corporate profits, all those things have been negative last month. The one big offset is that jobs continue to be generated, and if we remain positive on the job front, that should be relatively bullish Aussie as we go forward. So looking at the charts here, let's take a look at the COM dollars. And we can start we'll start with the Aussie. So we see the Aussie really backing off that 70 level. You could just see it really not being able to take it out. That's very natural. We're trading back down. The SMA here is probably going to be at 69.30 or so. That's natural support. The key thing here is if we break the SMA to the downside, that could suggest to me that we essentially set a lower high here, and we could really come back here and then try to find support, double bottom support at 68.50. If we hold and hover above the SMA, second run towards 70, certainly in the cards. Certainly if the data is positive, we're probably going to make a second run towards 70. But that 70 is a pretty serious resist. That 70 to 75 is a very serious resist. So it's going to take more than just this to push us through there. Kiwi, same kind of a story. Big extension. We ran away from the SMA now, so it's natural for us to come back. The SMA comes back at around 65.50. And here again, same kind of a story. As long as we can hover close above it, the uptrend remains in place. If we close below it, that creates essentially a new swing low, a lower high against which you trade for a possible double bottom test here in the Kiwi dollar. And then the one clear definitive trade last week that remains a very clean definitive trade is this break of the channel by dollar CAD. The 34s got taken to the downside. Now dollar CAD is notorious for kind of like breaking the channel to coming back up. But here's the interesting thing to me. The retrace back here maxes out at 3,400. So unless it goes through 3,400, it essentially is a sell the rally trade from now on. It is not one of those kind of trades where you you basically want to fade any strength in dollar CAD at this point, because we've shown the weakness on this break, and it's a pretty significant weakness. Chasing it to the downside is problematic. Dollar CAD is notorious for kind of making fresh lows and then retracing back up until it makes a second leg to the downside. You see this pattern over and over again. Here's a good example. We have this big leg down, then a couple of weeks of consolidation, there's a secondary move down, and then kind of a test of the bottoms as we trace back up. We're essentially still trading against this 3,100 low as a potential double bottom test. So and we're about 150 points away from there. Can we just push right there without retrace? Certainly, but to me, the more intelligent trade here is to kind of wait for the retrace, because I do think that the overall impulse here is to the downside. You just want to get yourself at a better price and better position before you want to enter this trade. So overall, the COM dollars are in a correction against the dollar this week, with dollar CAD being the strongest. We have one serious event risk with Aussie dollar. If that proves to be positive, we may have a retest of the 70s. But other than that, it's a relatively low consolidation week, and only a move back down in the yields below the 210s could spur a truly strong rally in the calm dollars as the yield differentials begins to compress. That's kind of how the week shapes up. Wish you guys the best luck, the best trading. Boris Lonsberg, over and out.